Right, guys, welcome to Electron FX. Today we'll be talking about how to take trades with support and resistance. So that will be our market structure 106, right? It will be markets. This will be the last video on the market structure series. If you need more, you will need to subscribe for our beginner course or our mentorship. Our master course, right? This has been a long ride. We started from the basics of market structure, and now we are coming down to taking entries with support and resistance, right? Taking entries with support and resistance levels. All right. So this is what we'll be teaching today. We're teaching how to take entries with support and resistance levels. All right. It's been a long ride to get to this point. This is our last video. Please subscribe to our channel if you haven't. Just go down, click on the subscribe and click on the like. I'm giving just few seconds for that, just 5 seconds. 5, 4, 3, 2, 1. Okay, thanks for subscribing and liking our channel. We need to do this so that you can get updates when we posting our next videos and stuff like that. All right, because after the market structure series, we'll be having a very powerful series. We'll be having a powerful series. This is where you will really get the source. We're having our powerful series, and on this series we'll be talking about trading the synthetic indices, right? I'm talking about trading the synthetic indices. I will open your eyes to things which you don't even know about the synthetic indices. I will teach, sharing so many secrets that will aid you to be profitable. In case you don't know what a synthetic indices is, please check the next video because we'll be giving the introduction and then the source will be coming. I assure you that after this series, combined with everything we have taught so far, you will make a real lot of money. I'm telling you, this is a guarantee. If you're able to follow this video, especially this synthetic indices series, it will be mind-blowing, I assure you. All right. So that will be in our next, that will be it from the next video after this. This is the last video of market structure. All right. Okay, let's go to the topic for today. Okay. Market structure 106, taking entries with support or resistance levels. Now, in our previous video, I said that in a for you to accurately get good trades, firstly, you have to determine the trend of the market. For instance, if the market is a bullish market, the market is making higher highs and higher lows. I said this in the market structure video. If you haven't watched, and please do want to watch it. So this is the higher low, the higher high, the higher low, the higher high, and all of that. So you want to take your entries when the market comes down to this point. Now, I want to point out something that wherever the market turns, it creates some kind of support there. So you see that the market came to this level. No, that's not what I needed. So the market came to this level and retraced. So what happened there? The market came somewhere here and the market retraced. It formed some kind of resistance. So the market trades from one resistance to the next resistance. So the market came here, it formed some kind of resistance here, retraced, then broke it. This was the higher low. This was your entry right here. You broke to the next high, they came to do some kind of retest and give it a new higher low. This is it. So this is how the market moves. It moves this way. Okay. Now, most likely you see this market do this. Market creates support or resistance while it moves. All right. Each time the market is moving, it's creating support or resistance. All right. So most likely this market you're seeing here is most likely going to do this. If it's still going to buy, it's most likely going to do this. Then this for a bullish market. So you should expect to see in the bullish market. You see the market breaking the previous high, which was a resistance, and then forming a new high, coming to retest, go up. This is a simple setup. All right. So this would have been your points of entry right here. This would have been a good point of entry at the higher low. All right. This would have been a good point of entry right here. Then so this would have been another good point of entry. This would have been another good point of entry for a buy, for those that like swinging trades. And mind you, as the market reversed here, it has formed some kind of resistance there. This is just the idea behind it. So the market breaks the previous resistance, which was a higher high, comes down to form a higher low. This would have been your entry. This would have been your entry. All right. Then it goes up to the next resistance, forms a higher low, breaks up. So this would have been your entry right here, right? This is how you trade. Okay. So this would have been an entry right here too. This would have been your entry. Okay. So you take your entries at the higher lows, taking it to the next high, higher low, next high, higher low, next high. All right. Now, to be safe, okay, maybe you said the market has been buying for a long time. There's most likely going to be some kind of reversal. It may break and break structure, all those things. So most like what I do is that I take my profits at the okay, when the market start approaching this point, the market, maybe I buy the market somewhere here, no, somewhere here, and the market start approaching the previous higher low. I start watching to see what is happening. If I see some kind of rejection here, I will most likely take my profits. Or if I'm not interested to hold the trade long term, I target the previous higher low for my take profits, right? I'm targeting this point, this resistance that send the market down, because most likely you may have a double top or a double bottom. These are patterns in the market which I'll be treating as we go on, double top and double bottom. So I'll be looking to take my profits at this point. That's be my first TP. Okay, that's my short-term TP. Let's make it short term. This is my short-term TP there. My short-term take profits. I'm looking to take my profit there, right? So I'm looking to take my profit at this point, at the previous higher low. Then this one, so this way, if I enter, I'm looking to my profit, my short-term TP, I'll, like if I enter with maybe a particular lot size, I may break even there. Okay. I will likely break even at the previous higher low, because there's a likelihood that the market may turn back. So short-term TP or break. So most likely, so short-term TP or break even level. That's where I close part of my partials. This what we do here, you close your partials, because most likely that place can send market down again. So you can take your short-term TP here. If you're not interested in the long term, you can break even, that is reduce your lot size. All right. Okay, so you can take a stop loss above your entry when the market gets to this point, because most likely you can do something like this. The markets may decide to break such. It may just come here, form a double top, and then may likely come here, form a double top, and then break down. So we have to be very careful when we're trading this market. We saw the market do okay. So most likely the markets can come here and fall down. So whenever the market comes to the previous higher, they'll be looking to break even, like that is to close a portion of your profits, or to take your stop loss up above entry. I want to point out that even if you don't make profit from a trade, as long as your capital is intact, even if it's $1 you made, you still won. The goal is to compound your capital. So even if the market does not actually go to the next high, it just does this and come back. As long as you have closed partial, you still won. If you took your stop loss, maybe you took your stop loss, you maybe place it maybe somewhere around there, and the market comes and stops you out. Maybe the market comes and stop you out here. You take your little profit and you go. So you didn't still lose the trade. All right. This is how you trade the market profitably. You will take your entry at the higher low, take it to the next higher high. This is it for this is just the schematics of what we'll be doing. All right. So let's look at real life example. Let's just look at real life examples. Okay. Let's look at real life examples so we can progress. Okay. Let's look at real life examples. So this is the secret behind taking trades, right? This is what you should look out for. This is the secret nobody will tell you, all right? This is the kind of things we'll be opening your eyes to in our beginner course and our master course. Please check the description to see how to join. Please, it's a very important thing that you join and learn these things. All right. So it's compulsory you join so you can learn to take trades for yourself and make a lot of money from your home. So it's good. The beginner's course goes for as low as $25, and the master course goes for as low as $70. But if you want the two of them, instead of charging you 25 and 70, we break it down for you to 60. Okay, let me just type that out so you will understand that. Let me just type that out so you can understand what I just said. Right. Right. I said our beginner course, our beginner course, it goes for $25. Master, our master course, it goes for $70. Then if you want both of them at discounts of, right? If you want both of them, you're giving you a discount of $60, right? This was it goes for the both of them. This is the discount, right? One both courses, this is the discount price. If you want the beginner course, $25. If you want the master course, it goes for $70. And if you want both of them, it goes for a discount price of 60. All right. So you have 1 year mentorship and access to me. And if you need this, just email me or hit the link. Just email me or hit the link below. All right. So just email me or hit the link below. Okay, that's for that. Okay, now let us look at the real life examples. Let's look at this market, right? Let's use ray charts now. Okay, now the first thing that you do is that you go to your daily time frame, which is 24 hours. You want to take, imagine you want to take this trade. Imagine you want to take this trade, right? Let me just remove this. Right. Imagine we want to catch this trade here. Now, if you look closely, this level right here, this was a very sweet setup. There was some kind, if you look closely, watch me, there was some kind of resistance level there. Why? Because we saw the market reject here and then have this heavy push. So this was some kind of bearish order block right there. And we can see what happened here. The market was buying. Immediately came to this level. It sold heavily, and it sold heavily to this point here. To this point here. So this is some kind of support. This is support of interest. I'm teaching you how to mark up your levels. So you have seen that the market initially, the market rejected from this level, and then look what happened again. The market came here. It could not break it the first day. You saw the market could not break it the second day. We saw the third day the market could not still break. that gave us an idea that this market was going to sell. So how do you take this entry? We have seen what is happening at the resistance and support level. I told you that you don't just enter the market because price has come to support or price has come to resistance. You watch to see what the market is doing. Wait for the reactions at that point. Okay. So we saw this setup, we saw this pin bar. This was a clean sell signal. So if I wanted to take this trade, all right, if I want to use the daily time frame to take this trade, I would have just placed my trade here. Okay, I would have placed my trade here with my stop loss above. See this wick here, I would have placed my stop loss above that wick, and I've taken my entry somewhere around there. Then my profit target would have been the next point where price was. See, it's a very good trade. Look at almost a 1:2, right? If I want to streamline my options, I would have just brought it down to this point to make it more realistic, because since price has already done this, I don't expect the price to come this high again. So I'm taking my stop somewhere around there. I'm having a good 1:3.3. Okay. This was a very good setup from the daily time frame. Now we have noticed that the market was going to sell from the daily time frame. How would we have taken this trade? We come down to our smaller time frame, like the 1 hour. We want to catch this trade. We have seen that the market was going to sell, so we wanted to catch this trade. All right, we want to catch this trade. So we'll come down to our 1 hour. Now, what do you want to see on 1 hour? Okay, what do you want to see on 1 hour? All right, now I told you about break of structure. All right, the market was making a high, made a low, made 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 a high. So this was like the obvious. This. I'm teaching you how to make entries. So this was the kind of last higher low. So that was structural point to give us a signal. So we saw this last low here. Then we saw what market did here. The market broke structure by closing below here. This point here. So the market broke structure. Why? See, so happened. I want to catch this thing. The market, see, this is the last higher low. The market closed below. See the clear break here. This was not really clear, but look at the clear break. The market closed clearly below that low. So when you see this market close below this low, what would I have done? I would have voted for price to come to give that new lower high. This is it. The market came and gave a new lower high, because now the market is now bearish because it has broken structure. So this is a new lower high. So market retraced all the way here to give that lower high. And how would that been that? Look at what happened there. This was a clear pin bar. Can you look at this candle here? This was a clear pin bar giving the sell signal. This was, remember, this was a daily resistance. So this was a clear signal to sell this market. So if I saw this pin bar, what would I have done? I would have sold immediately, right? Because I have seen what the break of structure, and I've seen that the market has been struggling to break there for days. So this would have been the clear entry, or this point here, when the markets came to this point again, gave this pin bar, I would have just taken my sell here. I would have sorry. I was teaching you how to take trades. Okay. I would have taken my sell here. Okay. Well, I've just made this is how to get good entries. Use your 1 hour time frame. Since I saw this candle close like this, I mean, I waited for the candle to come maybe to this point around there, but I've taken my sell somewhere around there and place my stop loss a bit above this week here. Or I've been looking at this week here. Look at this level. I would have taken my stops there. Then I would have been targeting this support. Have you seen it? This was a good 1:7. Have you seen why it is good to use your smaller time frames? On the 1 hour now, I have made a very good entry. I'm having a 1:7 little stop loss. This is my large take profits. Have you seen it? This was my target. This big profits. This is the 1 hour time frame. So I would have taken my sell here and place my stops above there, because I don't expect price to go there because that's broken structure. And then I would have reading this. This was a good 7.3. That means if I was risking $10, I would have made $74 with just this trade. Okay, this was a very beautiful setup. So you have to first of all look at the level that the market is on the daily or 4-hour time frame. Then you look at what the reaction of the market at that place, and then you look at the candlestick formation. Then you come to a lower time frame and wait for a break of structure. All right. Now let me just list those things out so as to be very comprehensive for you in case you want to screenshot. You say mark. The first thing to do is this is the checklist. This is the checklist. This is the checklist. Is price at a higher time frame level. Is price at a higher time frame level. If it is there, then ask yourself, what is the reaction at that level? Want to know if what is the reaction of price at that level? What is the reaction of price at that level? Then look for a break of structure. This is how you catch these trades. You wait for a break of structure on the lower time frame, and then make your entry. So this is the checklist. This is the checklist. Is price at a higher time frame level? Is price at a higher time frame level? That's the first thing you look out for. What is the reaction at that level? Is it rejecting? Is it giving a reversal confirmation? Is it giving you the pin bar, the inside bar, those reversal patterns? You can read that up. All right. Then you wait for a break of structure on the lower time frame. Like this, we saw the break of structure. Your market closed below this lower high. This was a broke structure, and then it's retraced back up to give us this entry. If I use my Fibonacci level, those have also given me a good entry, right? So this is my Fibonacci level. I would have just done this, right? Sorry, this was sorry, right. When I saw this break of, so I've just done this. And I've done this. Okay. This was the break of structure. Right, I'm trying to get this thing to respond. All right. Okay. This was the point. Then we have taken it to this point here. This was the swing high that broke structure. So you can see clearly that the market came to the 61.8. This is how to use your Fibonacci to catch your sniper. I will talk more about this in our mentorship class. Please do well to register and have the knowledge of all this. So it's tapped at our 61.8. Why did I take it? Because of this was a high. This is the swing low. So it's retraced to the 61.8. Gave us this pin bar. Meantime, I said that I was taking my sell, my sniper entry with my stops above here, and I'm reading this sell down to this point. So this was a very good trade setup, right? So this is how to take trades using support and resistance. You wait for the price to get to a higher time frame level. You don't just want to take trade anywhere. Some people want to take trade here. I can't take trade here or here or here or here. No. But if you really wanted to take this trade, you can still take a trade from somewhere around there, right? Look at this point here. There was some kind of level. If you miss this first entry, there was still a hope for you. Can you see this? Can you see this? There was some kind of level here. So the market broke this some kind of support, and then it became a resistance. So price came to retest, gave us this rejection. Immediately you saw this, I've taken myself here, then place my stop somewhere around here, and I've reading the sell down. So this was the second entry that price gave somewhere around there. It broke, came to retest, and then that is it. Okay, so that is how to catch your trades using the support and resistance level. You check for the price, what is doing at the higher time frame level. You check for the reaction there. You wait for a break of structure on the lower time frame, like the 1 hour, the 30 minutes, and so on and so forth. You can even come down to as low as 5 minutes to get your sniper entries. But I prefer using 30, 1 hour, so it's very clear, because right here you can see what the market did. It still went back up. So this was a clear BOS. This was not really clear. Because of this, it just this something like that. But this was a clear break of social. It broke here and then formed a new lower high, and with your stops above here, we would have reading this sell down, or we have waited for this price to break this support. Because this place hasn't pushing, this place push price up, here push price up. We're waiting for the price to break here. This was a clear break. You can take your sell here, or if you want, if you are still here from, if you were in a trade from here, means you saw this break, yeah, taking the sell at a retest. This would have been your second entry, and then we have taken your profits down at this point here, somewhere around here. This would have been your TP. Yeah, this bullish candle targeting this other block for your TP. So guys, that is it on how to take trades using support and resistance. So this is the checklist. There are some other things I couldn't really point out. I couldn't talk about other blocks. I couldn't talk about institution candle. Like look at what happened. It was an institution candle. Price clearly came above this place. Look at this was a resistance level. It clearly broke, kind of gave this week. Can you see what happened there? It did as if it broke. Some people would have bought here thinking it's a retest and would have still stopped them out. So I will teach you how to identify those traps in the market. All right. I would teach her to identify those traps in the market because this was an institution play. It just bought from resistance and broke. It gave a false break to take out stop losses. If you were here, your stop loss would have taken your stop loss, and then so what happened? It gave a this was a false break, and then it sold down. So if you have not, if you need someone to tutor you on how to take trades, all this stuff, just send an email to electronglobal@gmail.com. The email will be in the description page, or you send a message to the WhatsApp link below. All right. So in our next video, we'll be talking about the synthetic indices. Okay. That will be in our next video. Introduction. So this is where you get the real source, right? I'm teaching you why you should trade the synthetic indices. This is one of the things that make traders so rich. Introduction to synthetic indices. That will be our next topic. All right. So do what to hit subscribe and like this video. All right. Thanks. Cheers and God bless. See you in our next video. Okay.